Good evening to all of you. Welcome to this webinar on analysis of certain circulars issued by the CBIC after 47th GST Council meeting. Can anybody just confirm whether I'm audible?
Yes, Mahesh, you are audible.
Okay, yeah, thank you. So, as all of you know that the 47th GST Council meeting, it took place at the end of June 22. After that, various notifications were issued, and subsequent to that, various circulars were issued to clarify the position of taxability or otherwise of various issues. Now, among those circulars, we are currently focusing on circular number 177 to circular number 180. First of all, we will go through the provisions, the guidelines issued by the CBIC through circular regarding Tran 1 and Tran 2. As per Supreme Court order, Apex Court order in case of Philco Trade Center Private Limited, Supreme Court has directed the CBIC to reopen the GST portal for the purpose of filing Tran 1 or Tran 2 from 1st October 2022 for the period of 2 months, that is for October and November. Now, what the taxpayers can do during these 2 months is, number one, if they have not previously availed the credit, that is a transitional credit, they can avail the same during these 2 months by filing Tran 1 or Tran 2 as the case may be, whatever is applicable to them. And those taxpayers who have already filed Tran 1 or Tran 2, but they want to revise the same, then such revision can also be done through this reopening of the GST portal. Now, I will just share my screen. Now you can look on the screen, you can see on the screen the circular number 180. The main points to be kept in mind as far as this circular is concerned, as I already told, for the period of 2 months, the portal has been reopened. Number one. Number two, as far as those cases of Tran 1, Tran 2 are concerned, where the any litigation is going on, you have claimed certain credit in Tran 1 or Tran 2, and the same is questioned by the department by way of SCN, or the adjudication proceedings are in progress, or the order has already been passed rejecting certain part of transitional credit. For those cases, those people did not opt for this revision of Tran 1 or Tran 2. They need to continue their existing appeal proceedings, or either at the level of first appeal or at the higher forums. As far as litigation are concerned, this particular facility is not applicable for those taxpayers. Second one, it is also mentioned that as Tran 2 is concerned, this originally at that in 2017, when this facility was there, Tran 1 and Tran 2 for the first time, as far as Tran 2 was concerned, it needs to be filed on monthly basis. But now they have given the facility that you can file the Tran 2 on consolidated basis. You did not file it on monthly basis. And it is also reiterated in the circular, this is the last opportunity to file Tran 1 or Tran 2. In other words, this is the last opportunity to claim the transitional credit, if not already claimed, or to revise the transitional credit already claimed. After this particular opportunity, no further opportunity will be made available. Now, what is the Tran 1, Tran 2, as all of us know, but just to have a brushing of the concept, I will just go through the section 140, which is the main section for transition credit under CGST Act. We'll fast go through this particular section. So now I will take you through the transitional provisions in brief. Mainly section 140 deals with the transitional credit. Now, as far as this transitional credit is concerned, section 140 subsection 1 says that whatever credit you have carried forward in the last return under the existing law means Central Excise Act or Service Finance Act, whatever credit is carried forward in the last return, that will be allowed to be claimed as a transition credit under GST law, provided certain conditions are satisfied, that whatever credit you want to carry forward as a transition credit, you want to claim as a transition credit, it should be allowable self-made credit under the existing law, and at the same time it should also be allowable under the GST law. I will just narrate, or I will just mention the main conditions. Number one. Number two, as far as that credit is concerned, which remained unavailed on the capital goods, as all of us know, as far as self-made credit on capital goods was concerned, it was not allowed to be availed in one tranche. It was allowed to be availed in various tranches over the period of more than 1 year. So whatever unavailed credit was there on capital goods, it was allowed to be availed by way of a transitional credit. Then for those persons who were engaged in the manufacture of exempted goods or supply of exempted services under the existing law, that is Finance Act, Service Tax or Central Excise, for them whatever goods were in the stock, that is inputs, semi-finished goods, or were in the stock, and the same goods have now become taxable under the GST law, or those services which were erstwhile exempted under the existing law, they have become taxable under the GST law. For them also, they can also claim the transitional credit, whatever is there on those inputs which are there in the stock, inputs or capital goods. Again, the same conditions, the credit was available under the existing law, those inputs or capital goods, for them the credit is available under the GST Act, and such inputs or goods, the most important condition, are intended to be used for making taxable supplies under this act. This is the most important condition. Very simple provision that if you are making a taxable supply, then only you can avail the input tax credit. If you are making exempted supply exclusively, then no input tax credit. If it is partly exempt, partly taxable, then proportionate input tax credit is available. Now, if we see section 140 subsection 5, a registered person shall be entitled to take in his electronic credit ledger credit of eligible duties and taxes in respect of input or input services received on or after the appointed date, but duty or tax in respect of the same has been paid by the supplier under the existing law. In these cases also, even though the input or input services are received after the appointed day, that is the day of commencement of GST, 1st July 2017, and the tax has been paid under the existing law by the supplier, even then the transition credit of the same was allowed to be claimed as a transitional credit. And the 140 subsection 6 it is basically meant for those persons who were neither covered under central excise nor covered under, just a minute. Yes. So the last category is those persons who were engaged in trading of goods. Either they were first stage dealer or second stage dealer. Those terms are already defined under Central Excise Act, or they are simply registered under the VAT law, state sales tax law. In those cases, even though those persons, the basic problem with them was they were not having the excisable invoices, because under CGST law, what you can claim as a transitional credit is various types of central excise duties. Excise duty under, that is import duty, or the additional duty of excise. But if you are a trader and your supplier is not showing those type of excise duties in his invoice, then you cannot claim the credit of the same, because one of the important condition for claiming transition credit was that those duties should be clearly visible in the invoices which you are having. So the tax paying document or tax invoice, it's must that you must have it in order to claim the transitional credit. So for these persons who are not having such invoices in which excise duties was not clearly mentioned, but sales tax was mentioned, in those cases, they were allowed to claim the transitional credit of central excise to the extent of 60% or to the extent of 40% as the case may be. And this type of credit was allowed only when they have sold those goods. Number one, they should have an invoice, that is a tax invoice or other tax paying document. The goods in respect of which they are claiming the credit, they should be available in the stock as an appointed day, and those goods should be sold by them or supplied by them during 6 months from the appointed day. And most important, those goods should be liable to tax under GST law. In that case, if whenever they will pay the tax on those goods under GST, accordingly, in that proportion, the transitional credit in respect of excise duty paid on those goods by their supplier or by manufacturers will be allowed. So this was all about the main important transitional provisions. So now all this transitional credit can be claimed during October and November. Now coming to the next part, that is the another circular which deals with taxability under GST of liquidated damages which are paid in case of breach of contract or notice pay recovery. We will go through that circular now. So this circular number 178 has been issued by the CBIC clarifying various gray areas of taxation under GST. Now, as far as Schedule 2 of CGST Act is concerned, before going to Schedule 2, I will just take you through Section 7 of CGST law, which is the charging section. Section 7 tells that certain transactions or activities will be liable to tax as a supply. If you just see Section 7, as we know, all forms of supply of goods or services or both are liable to tax under GST, provided they are supplied in the course or furtherance of business and there is a consideration. And certain activities, even if there is no consideration, they are liable to tax under Schedule 1. Now, as far as current issue under consideration is Schedule 2. For Schedule 2, if you see subsection 1A of Section 7, which tells that if certain activities are treated as a supply in accordance to subsection 1, then they shall be treated as either as a supply of goods or as a supply of services as referred to in Schedule 2. So Schedule 2 provides mandatory classification of certain transactions either as services or as goods. Now coming to Schedule 2, if you go to this supply of services, serial number 5, clause E, this which I'm clause E, as you can see on the screen, agreeing to the obligation to refrain from an act or to tolerate an act or situation or to do an act is treated as a supply of service. There are various components. Number one, agreeing to the obligation to refrain from act. To refrain from an act means not to do an act. To abstain from an act. In simple words, not to do an act. Number two, to tolerate any act or situation. And number three, agreeing to the obligation to do an act. If these are the situations, and if for this particular activities you are getting certain consideration, then it will be liable under GST as a supply of service. Now regarding this, there were various questions, various litigations were going on. So CBIC has come out with a circular, that is circular number 178. Now before going through this circular, I will just like to make one point clear, that whatever circular today we are studying, all these circulars are issued by the CBIC under a particular section, that is section 168. And as far as the legal sanctity or the legal authority attached to the circulars issued by the CBIC is concerned, whatever is mentioned in these circulars is binding on the department, whether it is state or central department, but the same is not binding upon the taxpayers. In other words, if the circulars provide something which is beneficial to the taxpayer, yes, we need to adopt it, we need to follow it. But if the circular provides certain position which is not in the favor of taxpayer, then the litigation forum, whether it is first appeal, tribunal, high court, as always open to us. Circulars are not binding upon the taxpayers. If department authority tries to levy certain tax, interest or penalty by following these circulars, definitely various forums for litigation are open to us. Now coming to circular, through this circular, CBIC has just given example of certain transactions which will be taxable under GST or may not be taxable under GST. Now, the first component is agreeing to the obligation to refrain from an act. The most very famous example for this is non-compete agreement. For example, if there is a partner in a partnership firm which is manufacturing certain goods or engaged in certain services, and that partner is having a long-term partnership, and that particular partner now he is going to retire from the firm. In that case, that partnership firm may enter into an agreement with the partner that for a certain period of time, the partner will not engage in the same activities in which the partnership firm is already engaged in. It may be manufacturing certain special goods or supply of certain special services. So in consideration of entering into such an agreement with the partnership firm, that partner, say Mr. A, will not engage in certain activities which are carried on by the firm for a certain period of time. Partnership firm will pay X amount to Mr. A. So this is a clear-cut contract or agreement between partnership firm and Mr. A, and Mr. A is agreeing to the obligation to refrain from an act. In this case, whatever amount will be paid or payable by the partnership firm to Mr. A will be liable under GST, liable to tax under GST as a taxable supply. Now, agreeing to the obligation to tolerate an act or situation. Now, certain examples are given. I am taking the same examples which are there in the circular. A shopkeeper allowing a hawker to operate from the common payment in front of his shop against a monthly payment by the hawker to the shopkeeper. Or a resident welfare association, in simple words, a housing society, tolerating the use of loudspeaker for early warning prayers by a school. In this case, the school will pay certain amount to the society for tolerating such an act. Third component is agreeing to the obligation to do an act. In this example as given is where an industrial unit or a factory agrees to install certain equipments which resulted into zero emission or zero pollution at the request of a housing society which is nearby the factory, which is located in the neighborhood of the factory, and in the consideration of as against the installation of this particular equipment by the manufacturer, if the society is making payment of certain amount to the factory, then it will be liable under GST, liable to tax under GST as a supply. Certain examples are given. Now, making further analysis, the circular says that what will happen in case of liquidated damages paid for breach of contract. Various examples are given. The most common examples are liquidated damages in our day-to-day business. The parties to the agreement, they enter into agreement that if one of the parties to the contract is not able to perform the contract in accordance with the terms and conditions of the contract, these conditions may be to supply the goods or services within a particular period of time. Number one. Number two, to supply the goods or services of a particular quality. These are generally two conditions. Number three, that if one of the parties, again the same, commits any type of breach of contract in any manner, then the party which is aggrieved due to such breach of contract will receive from another party certain amount as a liquidated damages or as a penalty. So the thumb rule in this case will be, whenever two parties enter into an agreement as per Contract Act, this agreement may be oral or it may be written. Such agreement may be expressed or they may be implied. Yes, these type of contracts are allowed under Indian Contract Act 1872. So whenever parties enter into certain agreement and one of the parties to the contract fails to perform its obligations as per contract, then another party will get certain amount as damages. Such type of damages will not be treated as a supply under GST and will not be liable to tax. The main reason behind this is that parties never enter into any contract to breach the contract, to commit a breach of contract. Contracts are always entered into between two parties in order to honor their respective promises and to perform the contract. If one of the parties commits any breach and another party gets any damages on account of that breach, it will not be liable to tax because there is no supply. There is no supply of service by the party which is getting the damages to the party which is committing breach of the contract. There is no supply of service because such conditions are laid down in the contract not to motivate any party to commit the breach of the contract, but to ensure performance of the contract as mentioned, as agreed between the parties. So whenever any party gets damages from another person for breach of the contract, it is not for the purpose of tolerating that breach, but on the other hand, it is for the purpose of non-tolerance of that breach. And what is liable to tax as a service is tolerating an act. And getting the liquidated damages clearly means you are not tolerating that particular act. Hence, you are getting the penalty, getting the amount as a penalty as a liquidated damages. So this is a thumb rule. Now, going on the same lines, in case of notice pay recovery. What is notice pay recovery? Whenever any person joins any organization as an employee, there are certain clauses in the employment agreement that if that person wants to leave the organization, wants to resign, that there may be two types of clauses. That number one, he cannot leave the organization for a minimum period of say 1 year. He has to continue as an employee for 1 year. Number two, another type of clause may be, after that 1 year also, if he wants to leave the organization, he has to give a minimum notice of say 2 months, 3 months, depending upon the employer. Now, if employee leaves the organization, commits the breach of any of these two conditions, suppose he wants to leave the organization before minimum period of 1 year, or he is leaving the organization say after 1 year, but without serving the notice period, which may be 2 months or 3 months, whatever. in that case, the employee is required to pay certain amount to the employer, which is generally mentioned in the contract. It may be 1 month salary or 2 months salary or any other amount, depending upon the quantification, depending on the agreement between the employer and the employee. Now, again, in this case, whatever notice pay is recovered by the employer for the employee is not in nature of any service which is provided by the employer to the employee. No service is provided by the employer to the employee. The employer is getting such notice pay or is recovering such notice pay from the employee because the employer has incurred certain expenses in the past on account of training of that employee, recruitment of that employee. So, in order to recover that cost, thus this type of notice pay recovery clauses are incorporated in the agreement, and they are definitely not in the nature of tolerating the breach of contract by the employee, that is leaving the organization without serving the notice period or leaving the organization before a minimum period. So they will also not be liable to tax. Now, another question that comes up for consideration: what will happen regarding late payment charges collected by any service provider for late payment of bills? Now, for this, if we see section 15 of the CGST Act, it clearly tells that any late payment charges which are collected by any supplier of service or supplier of goods, they will form part of consideration for supply. In other words, they will be liable to tax. Another example, another scenario: cancellation charges recovered by railways for cancellation of tickets, or say cancellation charges recovered by any tourism company on account of non-availability of that customer on time, or on account of the fact that customer is not able to go to that particular tour or to go board the vehicle on a particular date for the purpose of traveling due to any reasons. Now, these type of clauses, these cancellation charges, they are generally provided, this type of facilities provided by all the tour operators or travel agencies, or for that sake even the railways, airlines. This is a normal part and parcel of their business. So it is mentioned in the circular, this is the view of CBIC, that whenever this type of cancellation charges are recovered by any tourism company, traveling agency, railways or airlines from their customer, the same will be liable to GST, because they are part and parcel of the service which is provided by the railways or by that airline or by that tourism agency. Going ahead, now another question that comes up here is, I am just taking important examples which we may face in our day-to-day routine business. Check dishonor, fine or penalty. Check dishonor charges. For example, if you have taken a loan from an NBFC or from a bank, and you have given them the post-dated checks, and if those checks, when they are deposited by the bank on a particular date, if they got dishonored, then the bank levies certain check dishonor charges. This may also happen in case of any other service provider or any other supplier of goods, that if you give him the checks for the payment of consideration at a later date, and those checks got dishonored due to any reason by your bank, then that organization may recover check dishonor charges from you. Now again, these check dishonor charges, they will not be liable to GST, because these charges are not recovered in order to motivate you to dishonor the checks. No supplier in the normal course of business will expect that checks given by his customer or its customer should get dishonored. So these type of charges will not be liable to GST, because by collecting these charges, no type of service is provided by the service provider or by the supplier to the customer, in whose case the checks got dishonored. Similarly, penalty imposed for violation of law. Now it's very simple. Whenever any penalty is laid down in any law and it is required by any government authority or by local authority or by the central government, state government, or any law, then whatever penalty is recovered by the authority, the same will not be treated as a supply, because these type of penalties are not recovered to motivate those persons to violate the law, but these type of penalties are recovered to act as a deterrent or to act as a demotivation or to discourage the persons from committing the breach of law. So there is no supply of service, no GST. I have already covered this forfeiture of salary, that is notice pay recovery. Late payment surcharge or fee, again the same thing. If it is incorporated, this is a normal practice, it will be liable to GST. It will be treated as a part and parcel of principal supply. That is, the principal supply may be supply of goods or supply of services. So again, whatever is provided in this circular by the CBIC, if our case is considered by those specific situation, then it will be useful for us. But at the end of the circular, it is rightly provided by the CBIC that while the taxability in each case, if you see clause 12, para 12 of the circular, the taxability in each case shall depend on the facts of that case. The facts and circumstances of each particular case has to be analyzed separately. So just by studying this circular or by issue of this circular, all the gray areas in this particular type of transaction, they are not removed. Still ambiguities are going to be there. As and when the new peculiarities come, they will be liable. Either they will be litigated at appropriate forums, or again, they may be, the dust on them may be removed by the CBIC by issuing this type of circulars in the future. Now coming to the next circular. So we have seen the circular number 178, 180. Now we will see circular number 177. I am not highlighting the circular number 179 because it deals with certain specific goods which may not be applicable to all the businesses. They are very specific and very special goods. So I'm not taking you through circular number 179. Now we are going to circular number 177. It's again a very important circular issued by the CBIC to remove the dust which was there in various gray areas in relation to supply of services. Whether those services will be liable to tax as a supply of goods or as a supply of services, whether they will be liable to GST or not at all, whether they will be exempted. These type of questions are answered through issue of this circular. Now, scenario number 1, or particular type of transaction, various type of transactions are covered in this circular. We will go scenario by scenario. Number 1, supply of ice cream by ice cream parlors. Now, this particular clarification by the CBIC has got much or a long history, long legal history, or a long jurisprudence. What happened in October 21, CBIC came out with the circular number 164, that there were 2 cases considered in that circular as far as restaurant services or supply of food is concerned. CBIC has clarified through that circular number 164 in October 21 that number 1, just a minute. That supply of food by cloud kitchens or by centralized kitchens, it will be liable to tax as a supply of restaurant service. This was the first litigation which was created by CBIC in October 21. Supply of food by central kitchens or cloud kitchens will be liable to tax as a supply of restaurant service. And the second one, supply of ice cream by ice cream parlors will not be liable to tax as a restaurant service, but it will be liable to tax as a supply of ice cream as goods. Now, just to give you some idea about this, as far as the services are concerned, we will first see the Schedule 2, yes, Schedule 2 of CGST Act. Serial number 6. As you can see on the screen, I will just maximize it. This is a totally gray area. Supply of goods plus services. As all of us know, in the previous taxation regime also, whenever there is a transaction which involves supply of goods as well as supply of services, then it was exigible, it was liable to tax under the service tax, that is Finance Act 1994. It was also liable to tax under the erstwhile state sales tax law. This was the provision, this was the position before GST. Now, after the introduction of GST, definitely whether it's a supply of goods or services or both, that is a combined transaction, all are liable to GST. There is no doubt as far as the taxability is concerned. But still there are doubts, there are gray areas even today, whether a particular transaction will be liable to tax as a supply of goods or as a supply of services. Because accordingly, the rate of tax will change and tax treatment will change. For example, if it is liable to tax a supply of goods and it is exempted, then accordingly the ITC treatment will change. And if it is liable to tax a supply of service or goods, whatever, if it is liable to tax fully. For example, let us take one transaction, that if a transaction is liable to tax supply of goods and there is no exemption, then ITC will also be allowed. But if it got classified, that transaction got classified as a supply of service and that service is exempted, then accordingly ITC treatment will also change. And not only ITC treatment, it will affect the trade, industry and the economy at a very large basis, at a global basis. Now, coming to the point under consideration, as far as restaurant services are concerned, in restaurant service, to give you a brief idea, there is supply of goods as well as supply of services. There is a supply of food, number one, and there is a supply of service by the restaurant. Which type of services are provided by the restaurant? Whenever you enter into a restaurant, you get a proper amenities or facilities. The facilities include that service of food by the waiters of the hotel. Then you get the proper cutlery, or the restaurant provide you food in a proper cutlery. They provide you proper furniture. They provide you good ambience in the form of air conditioning or in the form of proper decoration in the hotel. The restaurant may also provide you another amenities like entertainment, music, and so on. So these are the services which are provided by the restaurant. Supply of food and supply of services. Now, whenever we enter into the restaurant, we do not enter into a restaurant just to buy the food. We enter into the restaurant to enjoy the food, to consume the food, beside enjoying the services of the restaurant, which I have already told you. So it is classified as a supply of service, restaurant service. Now, if we see this particular clause 6 of Schedule 2, it tells that, please concentrate on clause B, entry number 6, clause B. Supply by way of or as a part of any service or in any other manner whatsoever. Supply of what? Of goods. Which goods? Being food or any other article for human consumption or any drink. Whenever such supply is made for any consideration. It tells that whenever there is a supply of any food or any drinks by way of a service, then it will be liable to tax as a supply of service. And further, it also tells that when there is a supply of food in any other manner whatsoever, it will always be liable to tax as a supply of service. So if we concentrate on clause B, whenever there is a supply of food, cooked food or prepared food, it will always be liable to tax as a supply of service, which is something confusing. It creates confusion because if we see pre-GST era, just a minute. Yes, if you see the pre-GST era, then in the pre-GST era, that is, I am telling the era of 1980 and 81, this restaurant service was made liable to tax by way of inserting a particular article or say sub-article in Constitution, Article 366 clause 29A, and one clause was inserted to make this restaurant service liable to tax as supply of goods, because in that era, that is 1980s, 1990s, there was no service tax. So states are losing a lot of service tax, sales tax on this particular activity. So it was treated as a supply of goods. Now, when service tax was introduced, again, this same activity was liable to tax as a supply of goods under state sales tax law, and in certain special cases like air conditioned restaurant, this same activity was liable to tax as a supply of service under Finance Act. Now, after the GST era was introduced, it is liable to tax as supply of service. Now, if we see I have already taken you through this clause B of Schedule 2, which says that any supply of any food by in any manner will be treated as a supply of service. I will just want to clarify here that food means the prepared food or cooked food, which is made to order. It does not include pre-labeled or pre-packaged manufactured items like chips or any packed food that we purchase at any outlet, including restaurant. It will always be treated as a supply of goods only. It is talking about food that is cooked or prepared food to order. Now, Article 360, we have seen that through this Article 366, restaurant service was made liable to tax as sales tax as a sale of goods. Now, after the introduction of service tax law, it was also taxed as a supply of service, and now under GST, it will be liable to tax as supply of service. Now, as far as one thing is acceptable, that yes, whenever there is a supply of food, it will be liable to tax as a supply of service. Now, a distinction has been made by the government by defining separately what is restaurant service. Restaurant service has been defined in notification number 11 by 2017, and that is the main issue of litigation. Now, if we see the definition of restaurant service, which is given in notification number 11 by 2017, it says restaurant service means supply by way of or as a part of any service, mind you, or in any other manner. The word which was there in Schedule 2 has not been considered here. Restaurant service means supply by way of or as a part of any service of goods, again the same food or drinks, provided by a restaurant, eating joint, okay, including mess, canteen, whether for consumption on the premises or away from the premises. This is the main context of litigation, that whenever any food is provided by the restaurant, if the person is consuming the food in the premises of the restaurant, then it can be accepted as it is a restaurant service because he is enjoying the various services of the restaurant. But when the same food is provided by restaurant or for that sake by any other person as a takeaway service or door delivery service, it is simply a supply of food as sale of goods, and it cannot be treated as a supply of service. But as we have seen in Schedule 2, we will not go into that litigation that whether it should be treated as a supply of food or as a supply of service, because I am limiting myself to Schedule 2. Schedule 2 clearly tells that whenever there is a supply of food in any manner, it will be treated as a service. So having said that, having accepted that it will be a supply of service. But as far as restaurant service is concerned, yes, there is a point of litigation that any supply of food, even though there is no element of service, which we see in case of door delivery of food, which we can see in case of this takeaway food services, or for the same reason, the supply of food by the cloud kitchens or by the centralized kitchens. Centralized kitchens supply food to the restaurants who are their partners, and cloud kitchens, they provide the foods either to the restaurants or directly to the customers on order basis. In all these cases, takeaway food, delivery food, cloud kitchens, centralized kitchens, there is no element of service. Keep that aside. So there is no element of restaurant service. Even then, classifying them as a restaurant service is not acceptable, which is done by this particular notification, giving the supply of restaurant, giving the definition of restaurant service. So making use of this particular definition of restaurant service, the CBIC is notified that all these services, takeaway food, door delivery of food, cloud kitchen, centralized kitchen, all will be liable to tax as a restaurant service. And consequently, all of them became liable to tax at the rate of 2.5%, that is 5%, 2.5% CGST, 2.5% SGST, without having any ITC. And it is a mandatory levy. The restaurants have to compulsorily tax their restaurant service at this particular rate only, 2.5% without ITC. No ITC on goods, no ITC on services which are taken by the restaurant, goods purchased by the restaurant, including capital goods or capital assets. So this is the main issue involved, that when there is no supply of service, or at least restaurant service, okay, there is a supply of service as per Schedule 2, but there is no supply of restaurant service certainly by takeaway food, delivery food, or cloud kitchens or centralized kitchens. Even then, the CBIC is treating the same as a restaurant service and asking them to pay the tax at 2.5% without ITC. If what was the position before this, those persons, centralized kitchens, cloud kitchens, or takeaway food, delivery food, they were paying the tax, no doubt as a service only, but they were paying the tax as any other food or beverage service, and the tax rate applicable to them was 18%, subject to availment of ITC. They can avail the ITC on goods, services, everything. So the main difference which was made, that before this particular circular, they were paying the tax as services, food and beverage services, paying the tax at 18% after availing ITC. After the introduction of this circular, they were made liable to pay the tax under the category of restaurant service at 5% without availing ITC. This is the main point of contention. Now, if we go through the rate notification specific to restaurant service, this is the relevant part of rate notification, serial number 7, heading 9963. Now, if we see, there are various clauses in this particular heading, because it includes number 1, accommodation services, as all of us know, hotel accommodation or guest house accommodation services. Number 2, food and beverage services. So as far as hotel accommodation service is concerned, if the room rent, the declared tariff is less than 7,500 per day, then the tax rate is 12%. And in another case, the tax rate, if the room rent the declared tariff is more than 7,500 per day, the tax rate will be 9%, that is 18%. Coming to clause 2, supply of restaurant service other than at specified premises. Now first see, we have already seen restaurant service means supply of food by restaurant, by mess, by canteen, by eating joints, whether the food is provided in the premises or whether the food is provided by way of a takeaway food or delivery of food at door delivery of food. It will always be treated as a restaurant service. Now just I am pointing out what is this specified premises. We will just see what is specified premises. Specified premises means premises providing hotel accommodation. Simple definition, hotel accommodation means giving room on rent for the purpose of lodging and boarding in a hotel or guest house. Premises providing hotel accommodation services, point number 1. Number 2, having declared tariff of more than 7,500. Now we'll just try to understand, analyze this particular entry, supply of restaurant service one by one. Point number 1, restaurant service is liable to tax at 2.5% without ITC, and all the services are now included in that. Door delivery services, cloud kitchen, everything. Now other than specified premises means if a hotel which is also providing lodging services and the declared tariff is more than 7,500 per room per day, in that case that hotel is not liable to pay the tax on its restaurant service at 2.5%. That hotel will pay the tax at 9% after availing ITC. This is a simple meaning. So for which cases, which are the cases for which this 2.5% is applicable? Simple: restaurants who are not providing lodging facility, restaurants who are providing lodging facility but where the declared tariff is less than 7,500, they will also be liable to tax at 2.5%. And beside this, cloud kitchens, centralized kitchens, takeaway services, delivery, door delivery of food, all. Now if you see the clause number 3, now through this particular discussion I am trying to guide you regarding this particular restaurant service as a whole. What is the position of taxability of restaurant service? Supply of goods by the IRCTC or by Indian Railways, whether in train or at platform, it is also liable to tax as supply of service 2.5% without ITC. Simple. Supply of outdoor catering, it is also liable to tax at 2.5% without ITC. At premises other than specified premises, we have already seen what is specified premises: a hotel where declared tariff is more than 7,500 per day. Number 1, supply of outdoor catering will be liable to tax at 2.5%, but it will be liable to tax at 18%, that is not 2.5%, in following cases. Number 1, if the outdoor catering is provided in a hotel where the room rent is more than 7,500. So suppliers providing hotel accommodation at specified premises or suppliers located in specified premises. In both these cases, outdoor catering will not be liable to tax at 5%. It will be liable to tax at 9% after availing ITC. Now again, outdoor catering together with renting of premises. So what is, just we will see the definition of outdoor catering. We have seen restaurant service. Outdoor catering means supply of by way of any service of any food, again the same thing, food plus drinks, on any particular event. If you see, that are event based and occasional in nature. Catering is always provided on event based. If you see the definition in detail, supply of food or any other article for human consumption, that is drinks, at exhibition halls, events, conferences, marriage halls, and any other outdoor or indoor functions that are event based and occasional nature. Very clear cut definition of outdoor catering is given. So whenever this type of outdoor catering service is provided at any premises, they will be liable to tax at 5% without ITC. But in following cases, they will be liable to tax at 9% after valuing ITC. Number one, if the supplier is providing hotel accommodation at specified premises, that is hotel accommodation with declared tariff more than 7,500 per day. Second one, supplier even though not providing hotel accommodation, but that supplier is located in specified premises, even then the rate of tax will be 9%. And beside this, outdoor catering plus renting of premises, for this very good example, whenever we go into a hotel, for example, we book a particular hotel, and we have also booked a banquet hall of that particular hotel, and we have entered into contract with the hotel for banquet hall plus supply of food, that is plus catering by the same hotel, and we are using the banquet hall of the same hotel. That particular instance or that particular example will also be covered by this clause 5, composite supply of outdoor catering plus renting of premises. In that case, that service will also be liable at the rate of 2.5%. But again, if that premises, that hotel is providing lodging services and the declared tariff is more than 7,500 per day, then this service will be liable to tax at 9% after availing ITC. So we have seen restaurant service. As I have told, any supply of food by anyone, cooked food or prepared food to order, it will be treated as a service as per Schedule 2. But whether it should be treated as a restaurant service or not, that is still a gray area. As per the circular issued by the CBIC, supply of prepared or cooked food to order by any person will always be treated as a supply of restaurant service, which does not match at all with the settled position of the law. Because even in the pre-GST regime, it has been held at various judicial forums, including Apex Court, Andhra Pradesh High Court, and various Madras High Court, and various other high courts, that if there is no element of service involved in any supply of food, cooked food, service, as I already told, element of service means proper service of the food by waiters, the ambience of the hotel, the cutlery which is used by the hotel, entertainment, music, and other facilities. If no such element of service is involved, then that particular transaction will be liable to tax as supply of goods or sale of goods. It will not be liable to tax as a supply of service. This is the pre-GST scenario. But since now Schedule 2 is there, we do not want to challenge that Schedule 2. Let us accept it that yes, it is a supply of service. But this restaurant service is something which is not digestible. Unless and until you provide certain other services, it cannot be treated as a restaurant services. And even the definition of restaurant service itself tells that supply of food by any service provided by, this is very important, provided by whom? By a restaurant, by a eating joint or mess or canteen, will be treated as a restaurant service. Cloud kitchens, centralized kitchens are not covered in the definition of restaurant service itself, because they are neither restaurant nor mess nor canteen. They are totally a separate category in itself. But now, having said that, since this circular is given by the CBIC, the ball is in the court of taxpayers. Either they can go for a litigation, and if this point is properly litigated higher forums, certainly the case will be in the favor of taxpayers, because even though supply of food is treated as a service, it can never be treated as a restaurant service in all the cases where there is no element of service or restaurant service for that side at all. Now with this, I conclude my session. Now I make the forum open for question and answer. Yes, anybody wants to ask any query?
हिंदी में भी बोल सकते हो,
आप हिंदी में भी क्वेरी पूछ सकते हो, बता सकते हो, हिंदी, मराठी और इंग्लिश. Okay, then since there is no query, I will close the session. Thank you all for the patient hearing. Thanks a lot.
माधव सर नहीं है, माधव सर भी नहीं है.
कौन?
माधव सर